Hey everyone, welcome back to Corporate Decoder. Today we're diving into the exciting world of Nasdaq's preliminary proxy statement. I know, it sounds about as thrilling as watching paint dry, but trust me, there are hidden stories in these documents and we are going to decode it for you. We're going to break down what this proxy statement is all about. In simple terms, it's Nasdaq's way of asking its shareholders to vote on some important decisions at their annual meeting. Think of it as a shareholders manual, complete with a list of candidates for the board, executive pay details, and some proposals that could change how the company operates. So, let's get to it. First things first, this is a preliminary proxy statement, meaning it's not the final version yet, filed by Nasdaq itself, the company that runs the stock exchange. The annual meeting is set for April 28, 2025. Let's take a sneak peek at what Nasdaq thinks about themselves. They see themselves as being at the intersection of technology and capital markets, providing platforms and services for global markets, aiming to enhance liquidity, transparency, and integrity. Basically, they are saying that their goal is to make sure the financial markets work smoothly and fairly. To better understand where they're headed and what they think are their foundational pillars, liquidity, transparency, and integrity. The company wants to innovate and make markets more sustainable and trusted, ensuring and enhancing the integrity of the world's financial system through compliance and financial crime management. Okay, now we're getting into the real meat. This is where we hear from the big bosses. There's a letter to the shareholders from the board of directors and another from Adena Friedman, the chair and CEO. The board brags about Nasdaq's strong performance in 2024, marked by resilience, impressive execution, and a relentless focus on creating value for you, the shareholders. They're touting increased dividends, debt repayment, and share repurchases. They highlight growth in the financial technology division and a record year for the index business, as well as the company substantially completing the integration of Adenza, a company that provided mission-critical software to the financial services industry. They increased the quarterly dividend by 9% and paid out $541 million total. They repaid more than $800 million of debt from the Adenza acquisition, meeting the goals ahead of schedule. Finally, they bought back $145 million of shares. The integration of Adenza has also been completed, and that they fully actioned the $80 million in net expense synergies that were announced at the completion of the acquisition. A year ahead of the initial target, the numbers sound great, but we need to keep them in mind as we look at the harder numbers later. The board is actively focused on the high priority work of talent management oversight. In March 2025, they announced a new employment agreement with Adena Friedman, locking her in as chair and CEO. Adena Friedman herself chimes in with her own letter echoing the board's enthusiasm for 2024. She emphasizes milestones achieved, such as the integration of Calypso and AxiomSL, deepening client partnerships, and meeting financial goals ahead of schedule. Looking ahead to 2025, she mentions a more volatile market backdrop, but also highlights new capabilities and innovation. She emphasizes integrating Adenza, innovating with AI, and accelerating growth opportunities. Nasdaq's financial technology division ended 24 with a well-structured operating model, and they are deploying the One Nasdaq go-to-market approach to deliver holistically for our clients. For 2024, Nasdaq delivered net revenues of $4.6 billion. Non-GAAP revenues of $4.7 billion increased by 9%. Annualized recurring revenue was $2.8 billion, an increase of 7% year over year, while annualized SaaS revenue increased 14%. Before we get to the shareholder meeting items, Nasdaq is pulling at your heartstrings by promising a $1 donation to the Global Financial Literacy Excellence Center for every shareholder that votes. Okay, the meeting is on June 11, 2025. There are 4 key items on the agenda: electing directors, approving executive compensation, ratifying the appointment of their accounting firm, and approving an amendment to their corporate charter. The board recommends voting for all 12 director nominees. The Nominating and Governance Committee recommends the election. These directors have diverse backgrounds, attributes, and experiences. Here's a quick rundown of the nominees: Melissa Arnoldi, Charlene Begley, Adena Friedman, Essa Kazim, Thomas Klott, Catherine Koch, Holden Spart, Michael Splinter, Johan Torgeby, Tony Towns-Whitley, Jeffrey Yabuki, and Alfred Zoller. It's quite the accomplished group with backgrounds in technology, finance, and global business. The board says that when considering nominees and renominations, the Nominating and Governance Committee considers many factors, including educational and professional background, diversity, client experience orientation, and a broad understanding of global finance and markets. The statement includes a diversity matrix that breaks down the gender and ethnic background of the nominees. There are 5 women, 7 men on the board. Ethnically, the board is comprised of 1 African American, 1 Asian, and 7 white nominees. The Nominating and Governance Committee oversees and plans for director succession and refreshment of the board to promote and support our long-term vision. In doing so, the committee takes into consideration the corporate strategy and the overall needs, composition, and size of the board, as well as the criteria adopted by the board regarding director qualifications. We get a blurb for each nominee, including career highlights and what impact they have on the board. For example, Melissa Arnoldi is an innovative technology leader with expertise in cybersecurity, software, and network operations. Keiichi also has experience in customer experience. The board operates with 4 key committees: audit and risk, finance, management, compensation, and nominating and governance. Each committee has a specific area of oversight, from financial reporting to executive pay and corporate governance. Non-employee directors receive an annual retainer of $85,000 plus additional compensation for committee leadership and equity awards. The lead independent director gets an extra $75,000 retainer. This section also states that under our stock ownership guidelines, our non-employee directors must maintain a minimum ownership level of 2 times the annual equity award. This ensures they are also aligned with the shareholders. Moving on, the governance section lays out Nasdaq's commitment to good corporate governance, highlighting key aspects like board composition, shareholder rights, and risk oversight. Nasdaq emphasizes continuous board refreshment with diverse thought and experience and transparent governance framework. 11 out of 12 of their directors are independent. There is commitment to continuous learning and director education and board oversight of human capital management, including culture and values. Here we get a list of the key players at Nasdaq, including Adina Friedman, Tal Cohen, Michelle Daly, PC, Nelson Griggs, Bradley Peterson, Jeremy Schall, Brian Smith, Sarah Youngwood, and John Zecker. It's a who's who of Nasdaq's leadership. Next up is executive compensation. The board recommends voting for the approval of the company's executive compensation on an advisory basis. And they want you to know that the compensation discussion and analysis explains their executive compensation program and the decisions made in 2024. They want to attract, retain, and empower employees to successfully execute the company's growth strategy. It's all about aligning executive pay with company performance. Again, they mention record net revenues in 2024 of $4.6 billion. An increase of 19% from 2023. They finished the year ahead of their net expense synergy and deleveraging goals. It was a record year for launches of new products, and they demonstrated their innovation leadership with the launch of AI-powered solutions. The majority of our top executives' pay is performance-based, with the majority of the NEO's pay consisting largely of equity-based compensation, so, all that hard work is being rewarded. They want to reward performance in financial and strategic areas and make decisions and incentivize behaviors that are aligned to the long-term interest of the shareholders. To evaluate how much to pay their people, every year they assess senior people while also using market data to understand what compensation should be. The company's consultant looked at companies like CBO, CME Group, S&P Global, and PayPal. This peer group is used to benchmark executive compensation. There is an incentive structure in which each executive can earn cash incentive awards through our THEP based on achievement of performance against predetermined performance goals. So that would be artificial until proven. And no performance to generate cash resulted in some bonuses. They got payouts ranging from 117% to 170% of targeted amounts. Some of the elements that go into getting paid include corporate financial objectives, strategic objectives, division, business unit financial objectives, and culture and innovation. Okay, almost done. Here is some additional information about Ms. Friedman and the other NEOs and their compensation. There is a table with all the facts. This would be good to go through to see a quick snapshot. This is more details on how all of that stuff works. General equity award grant practices, general trading practices, hedging policies, etc. This is the Audit and Risk Committee talking about how they did their jobs. They say they reviewed the financial statements, discussed things with the external auditors and the management team, and that's why they recommended that the board of directors include all this info in the filing. The board recommends shareholders vote for the ratification of the appointment of Ernst & Young as Nasdaq's independent registered public accounting firm for the fiscal year ending December 31, 2025. But here is a list of every meeting that happened. Board 9, Audit and Risk Committee. 11, Finance Committee. 4, Management Compensation Committee. 7, Nominating Governance Committee. 6, AMPA. Nominating Governance Committee. 6. Last but not least, Proposal 4 calls for shareholders to vote for the amendment to Nasdaq's charter. Basically, they want to limit the personal liability of the company's officers in certain situations. You can find all this information in Annex B to the report, which is attached. This is the last part of the report, a quick summary that states what has been added. The numbers all sound great, but there is also a lot of risk. So what are my overall thoughts on Nasdaq? Let's start with strengths. If there is a clear focus on long-term growth and shareholder value, with emphasis on recurring revenue and strategic acquisitions like Adenza are. They are leaders in key markets such as IPOs and index products. They have strong governance and risk management practices reflected in the independent board and compensation policies. There are also some challenges and risks though. Heavy reliance on key personnel and integration success. They need to retain key executives and ensure successful integration of acquired companies. There are also market and geopolitical risk with unpredictable macro environment and dependence on stable financial markets. Intense competition for market share and tech innovation. Overall, while their debt levels raise some concern and market volatility could be hard to deal with, Nasdaq's brand, its leading position and focus on technology may provide a foundation for continued success. If you got some value in this analysis, give us a like and a comment. That will teach the algos that you care. Also, consider sublist the arrowing for more in-depth analyses like this one. Until next time.